Good afternoon, everyone. We're gonna give people a little bit of time to start strolling in. As a reminder, hey, trading is risky. Don't follow anything we do. The purpose of this stream is for educational purposes, and it's to add value. We're all about adding value to traders, and we have a huge value adder today. We have the CEO of Edgeful with us today, and he's gonna show some really cool technology that they've developed. They've been it's their passion, and it's what they do really well is they provide edges to traders, which is amazing thing. So we have him as a guest today, and we're going to kind of go through some demos and stuff like that. And he's going to show you how to use it and how it all got started. But as I said, super cool show today, super exciting. So tell us, how did you get into trading? I want to know the backstory. I want to know how you got started. And, I love hearing the stories for people.
Absolutely. Well, first of all, thank you for having me. It's great. And just so everyone knows, if I keep looking over here, that's where I have this is like my screen share. This is where I have Brian. So I'm going to be looking over here so I can kind of like look and talk to him. But my name is Andre. I'm the CEO of Edgeful. As a really, really short summary, what Edgeful does is it's a data analysis platform for day traders. Pretty much any market strategy or concept, if you want to know, like if you're ever asked, how often does this happen? That's what Edgeful answers. Pretty much like any concept you can think of, we either have something for it or we'll actually build it out for you. So if you want to know how often price breaks out of the initial balance, or how often Thursdays close green, or how often is a certain weekday make the high of the week, we have a report for it. So it's just some really high level context on what Edgeful actually is. It's a technical analysis tool for day traders. But the story of how it was actually founded and like how I started getting into trading was, so my background is in finance and accounting. I was an analyst at a hedge fund. I was also an analyst at Goldman Sachs. So I left Goldman, started to trade. And when I started to actually trade, I was doing a lot of work in Excel. So for me, I'm a huge fan of Excel. I have certifications. I'm super comfortable with Excel. So it was actually like pretty exciting for me to start to dive in and put my trading data into Excel. But then eventually it got like, it was honestly too much. It just took like 5 or 6 hours to create a new like quote unquote report. And it just like wasn't worth the time anymore. And like the way that you have to structure things, and if you want to add filters and like all these other like variants or like however you want to call it, but it just took way too much time for me to do it. And I would also have to buy all the price data. So like every month or so, I'd have to go and like buy price data to update all my models. Honestly, like it became a nightmare. And even for someone who has Excel certifications that actually loves Excel, it was just too much for me. So I was like, you know what? I know I need this information, and there must be a tool out there that actually just does this for me, so I don't have to go and like maintain this or update the data, etc. And I looked. Every single trading software that I found was either Windows 95 lookalike, so like the interface was either horrendous, or I needed to be a programmer to actually use it, which like I don't know how to code. So I was in this like weird middle ground where like there was nothing really for me, and my Excel experience like wasn't cutting it. So that's where I was like, wow, I cannot believe that there is not something that can actually do this for me. And that is how I decided. I was like, I think that there is a much bigger appetite for a tool like this that tells you how often these things happen, whether it's a gap fill, opening range breakout, initial bounce, fair value gaps, like literally like anything that will tell you like how often does like XYZ happen. And luckily there's been a great appetite for it. And what's the most important piece for us, at least, is we want to make sure that people who are not analysts, who are not quants or programmers, have the ability to trade with data and not their emotions. So like we make it super easy for people to come in and just like quickly get a snapshot of like what's going on, how's the current market environment looking. And that's really been the goal, is like give people access to the information that will actually make them profitable, not like all the other fluff that you see online.
No, it's amazing because you guys are data driven. And that's one thing I always lean into is like, look, without the data, you have no idea what things are happening or what edges play out and all that other stuff. And then a lot of times people might collect the data, but because their emotions and their trading get in the way of like the purity of the data, that's where I love how you guys come in and like it gives everybody a really great foundation, and it's visual, right? You can actually see stuff like in the way you guys put out the data and like with the visuals and stuff, it is amazingly helpful. And that's why we wanted you on the show, is like, this is a value add. And there's a lot of stuff out there that they promise that it's a value add, but in reality, it's a money grab, right? I hate it. Like it's such a money grab type of space. And that's why what you're doing, and for the price that you guys have it at, like, dude, it's huge. It will pay you back tenfold if you can take and adapt those strategies and you don't let your emotions get in the way, because that's usually what traders do, because it's really hard. But ultimately, your guys' tools are just amazing. So thanks for sharing the story. It's freaking awesome. As always, guys, keep in mind, 60 or 100 likes or whatever we're going for. We're going to do a giveaway today. We'll have our boy do the read off. He can butcher the names. So I don't have to butcher them. I love it. Hopefully get some really difficult names. I love that part. Really appreciate the back story to it, because I didn't know. It's really cool to see that you saw, I tried the Excel stuff, and you have these super wazoo, credentials and stuff, and I didn't. And I tried to do the Excel stuff, but it just becomes way too complicated. So I'm glad you were able to find a way to introduce all this data to people that are novices, that don't have programming experiences, and really kind of equal and level the playing field for guys, where we can look at the same data that quants are looking at, the same data that these analysts are looking at. And with your background and being an analyst, it's great that you're able to develop this for the average Joe, the average guy, the average trader, the average girl, whatever, it doesn't matter. So good stuff, man. What do you got to share for us? I want to see some cool, graphs and how you would use them, and maybe you can give some scenarios for that.
Absolutely. One thing that I'm going to say just before I jump in. So this is the Edgeful homepage. This is like the education page. But just before we get into the actual dashboard itself, one thing that Brian had said was that the other piece is like you actually have to stick to the data, which is obviously the case, right? You have to stick to the data. There's no question about it. Like there are going to be days where you do, there are going to be days where you don't. However, if you knew that there was an 85% chance that this thing was going to happen, trust me, it's so much easier to stick to the data, as opposed to just like blindly going long or blindly going short. Like if you knew, okay, 85% of the time price is going to break out of X level, like it becomes so much easier to sit in drawdown or sit in a trade that might not be going in your favor immediately, because you know that the data in the last 6 months, 1 year, 2 years, or 5 years is pointing in this direction. And that's just one thing where it's the emotional aspect is obviously critical, but you need to understand that when you have such a strong backing that's data backed, you don't really have too much to worry about. So one thing that I want to mention is there is zero opinions in Edgeful, because there's nothing in here is subjective. Like we don't use trend lines. We don't use like, trend lines is like one of the best examples. Like we do not do anything that you could not recreate every single day with no subjectivity. So high of week is the high of the week. The gap fill is the gap fill. The opening range breakout, it is what it is. And that's where we don't have anything that's subjective, which makes it easier for you.
It makes it a million times easier, because there's enough subjective decision making that goes into trading sometimes, where if you're just providing very raw and pure data, that's where you should start when you're building a strategy. And that's why I love you guys and what you're doing, is because you're giving the purest form of data.
Yeah.
And it's not a bunch of, random, oh, it's bank levels or this or that. No, it's just
Yeah.
pure data. And that's what's
Exactly.
amazing about this approach is like, and
100%.
you also touched on the point, like once you have the data and there's a probability, because we all deal in probabilities, right? That's
Yeah.
what you are as a trader. And if you know the probability is 85% over the last 3 months, that does give you the extra conviction that you need to actually hold the trade. And that's where instead of getting out at 1R, you're getting out at 2R or whatever, right?
Yeah.
That's what's important. So
Yeah.
I love that you broke it down that way. All right, cool. What are we looking at? So
Sure.
overall progress.
This is the Edgeful homepage. If you were to say, how can I get started with Edgeful? Right here on the top left, the homepage, there are 10 different videos here. Some of them aren't actually videos, like some of them are just like a checklist, like to join the Discord. But there are 10 videos here that if you watch all these videos, and some of them, like this one is only 11 minutes, played on 2x speed, I don't really care, to be honest. But if you go through these videos, you will have 95% of everything you need to know about Edgeful. The first one right here, chapter 1, how to take a trade using Edgeful in 15 minutes, is showing you how you can take a fully data-backed trade on NQ using what we call the ultimate bullish setup. So you have data-backed bias, targets, entries, and stops all through this, what we call the ultimate bullish setup. So the first thing that you're going to see is, how do I actually take a trade? That's the first video. Then going down, we have how you can use each of the different features that we have. We have why it's important to keep up with the data over time, how to use our trading view indicators. So I'll show you guys, obviously, like here we have trading view indicators. Like this is our market sessions. It'll automatically plot the open, high, low, and close of the market. So you always know what session you're looking at. This is only one out of the 35 that are included in the Edgeful plan. And then we have to join the Discord. But this is really the main checklist. If you're doing this, you're going to have success. If you're not doing it, you're probably not going to have success. Just being totally flat out, totally honest with you guys, this is the place to get started. Now, what I want to do is I want to show you guys some of the most popular reports that we have, starting with the initial bounce. And I want to show you guys NQ. I'm assuming it's probably the most popular one that everyone here trades. So this is the report page. This is like where the charts are. This is like where the meat of Edgeful is. So you can see right here, we have the drop down on the side. This is where you pick your ticker. This is where you pick your report. This is where you're going to pick how far back you want your report to look. The defaults are probably fine in terms of what we have here for the date range and the session. But this is the data. This is where you're going to look for the actual data that we provide, right? So first thing I want to mention is, what is the initial balance? So let's go over here to our trading view. Let's go to our indicators, the initial balance. So automatically plotted for me every single day. I have my initial balance right here. So you can see this green and red line right over here. Every single day it's plotted for me. And you can actually, like right here, the green and red lines. So the initial balance is the high and the low of the first hour of the session. So right now we're looking at the New York session. So it's from 9:30 to 10:30. And what this report measures is how often does price break one side, which is this blue area right here, both sides, which is the black area, and then neither side of the initial bounce. So obviously, if you're looking at NQ, you want to expect one side to break, because 91 out of the last 128 days have only broken one side. So this is a great example. Today's also a great example, but this is a very clean example. So you can see right here, price breaks to the IB low right here. And then what you want is do not want to expect this to happen. This is a double break. And when you expect this to happen, you are expecting this to play out. Now, you wouldn't have known this if you didn't see this report, to be honest. It is extremely difficult. You cannot, it's not extremely difficult. It's like practically impossible to be, oh yeah, the double break happens this amount of time, because you get like recency bias. You made a trade on a reversal. You expect it to happen a lot more often. It is not that often. I will take 71% all day. I am not expecting this retrace to the IB high to happen after one side breaks. I want to expect continuation to the downside, because that is a single break on the day. One important distinction relating to the IB is that this is still a single break day. A double break only means that price breaks the high and the low within the session. So super important. This is not a double break because it broke once and then broke again. But I want to talk about this report with a couple other ones, but in terms of how you can actually build your bias every day, that is fully data backed. So you're not guessing if prices can go up or down anymore. You're going to have fully data backed bias on using the Edgeful reports. So this is the initial bounce. As a really quick recap, the high and the low of the first hour. How often does price break out to one side, like this, both sides, which is like this, or neither side, which is super rare, and I'm not going to waste time trying to find an example, but that would mean that price does this for the whole day. Does not break out at the high or the low. So the idea is you want to expect one side to break, but not both sides. So right here, only 5 out of the last 128 days have not broken either side. So that means you want to expect a single break. You do not want to expect a double break. I hope that makes sense. Very, very simple, the high and low of the first hour. Now, by itself, this is very strong because we have 71% right here. But I'm going to give you guys something that makes it honestly so much stronger. And we also have an indicator for it, and it's called the opening candle continuation report. So what I'm going to do here is scroll down to my opening candle continuation, and then I'm going to hide my market sessions, and I'm going to hide my initial balance. And what do you see here? A red box. I'm going to explain what this red box is in just a second, but you can see we have a green one right over here. I'm going to zoom in here. I'm going to put these back on. The opening candle continuation measures the actual color of the first hour. So you can see right here, from the open to the close of the first hour of the session, this one is red on this day. So for every single time that there has been a red opening candle, and the opening candle is just the first hour, you can customize it, but it's not technically a candle. We just call it that, so it scales with the customizations. But if the first hour is red, 74% of the time in the last 6 months, NQ has closed red. If the first hour is green, 79% of the time, the day will close green. So you can see today, this is using live data to tell you what's actually happening today. The opening candle is green. Your bias is obviously bullish. You do not want to expect a day. Now this is where you can start to combine these things. You do not want to expect a day with a red opening candle to close green on the day. Because again, 74% of the time, the day is going to close red. So how do we combine these things? How do you multiply your edge and get so much more confluence using just 2 reports? Right here, we have a red opening candle. The open to the close of the first hour is red. Then, this is obviously very bearish. We also have price breaking to the IB low. This is also very bearish. And what's really beautiful is that when these two are pointing in the same direction. So you can see right here, red opening candle, price breaks the IB low. What do we want to expect? Price to do this, right? This is continuing with what the data shows. Price continues to the downside. What's really nice about these two is that they both form at the first hour. So you wait that first hour, now you have 2 very strong reports. What you want is for them both to point in the same direction, either bullish or bearish. One thing that I will say is that you do not want to trade these when they're in opposite directions. So what that means is, let's say that there was a green opening candle here instead of a red one, right? Let's pretend that there was a green opening candle, price breaks to the downside. You now have 2 very strong reports that are pointing in opposite directions. You do not want to trade this. So I hope that makes sense. If there are any questions, someone please let me know where I can.
No, this is awesome. So I love the fact that you've taken reports and you've shown an actionable way to implement this trading. And what you're talking about where multiple reports align, it's confluence, right? You're
Exactly.
using multiple things to build confluence to say, hey, if both things are saying it's a short today, I should be looking to get short. And you can build methodologies around that. You can have different entry triggers.
Exactly.
You can build around this data, right? And when you're able to demo it like you just did, this is really what trading is. You take a probability or 2 probabilities, and then when you have 2 probabilities, what you're doing is you're just building extra context. You're building extra confluence that this particular move's going to happen, and then you have higher probabilities. So
Exactly.
you giving us an actionable plan like this is amazing. This is
I mean,
type of stuff
we're
we
not
like to
even,
see.
yeah, we're not even close to done yet when it comes to like the reports that you can layer in. So these are two that you can have for bias, super, super strong for bias. There is one that is absolutely incredible for placing super high probability targets. So I want to layer, I'm going to show you guys what this is. I'm going to show you guys how our trading view indicator will also give you the levels every single day. But one of the things that I seriously, like, I cannot emphasize this enough, is that on the bottom of every single report, right over here in this report explainer video, this is like mandatory to watch. They're at most 10 minutes. Play it on 2x speed. I genuinely don't care if you play it on 0.5 speed or 2.5 or 3 times. But every report you have to watch at least once the explainer video, because it tells you what it measures, how you can use it with live chart examples. So you are never assuming what's being measured. In every single video, for every single report, we have an explainer video. I don't do these for fun. There are over 100 reports. I've made over 100 videos. I don't do them for fun. I do them because they're important. And I would not do them for fun because it's a lot of work to actually make these videos because they're so important. So anytime you guys come across a new report, scroll down, just watch the video one time, and understand what's happening.
Just to be short, you love making these videos, is it?
I really love making these
love
videos.
it.
There's nothing more that I love than explainer videos. That is like my passion.
All right. Yeah. You don't like making the videos, but you make them because they're super important. I got it.
Yeah. And
okay.
Go ahead.
What questions do we have? Like, let's let people ask some questions right now, because you've just basically bombed them with this like knowledge thing of so much different stuff. So let's unpack it a little bit. Let's let some people ask some questions, maybe if they have it. Oh, look at this. People want an exclusive promo code for the stream today. That's a great thing. I don't know if you want to do anything, or, you know, I think your pricing is already pretty phenomenal for what you offer. Do you guys like do a demo, or you can explain maybe a little bit about all that?
Sure. So Edgeful right now is $49 a month. We do not have any discounts that we do ever. So that means no Black Friday, no July 4th, no Christmas, no New Year's. We never do discounts. The data that we're giving you here pays for itself. I mean, just even if you catch like 20 points on NQ here, you've paid for it like for the month. So we don't do any discounts at all. We have the trading view indicators. We have stocks, Forex, crypto, and futures. I know almost everyone watching here trades futures, but if you trade options, you can look at stocks. We have live data as well, which I'm going to touch on in a second. So the short answer is we do 0 discounts. So I know, tears, but that's the answer. $49.
Yeah, 49's great. Does it also include the indicators too?
Yeah. So the indicators, we have 35. Yeah, so we have so everything that you're looking at right here is part of the indicators that we have. So for the orb, the fair value gaps, there's practically one for like every report that we have. And it's all part of the package. Like, most people pay $49 just for these indicators. So just so you guys can see, if you trade the other sessions like Asia or London, this market sessions indicator will automatically plot the open, high, low, and close of your Tokyo, London, New York sessions every day. So you never have to get confused on where's my New York open or whatever else. It does it in a really nice way. And you can also customize the colors, and you can make them whatever you want, right? So if I want to make my London red, I can do that. And you can customize them to be however you want. But yeah, we have 35 indicators that come with Edgeful, part of the plan. And obviously the price is really reasonable.
Yeah, it's actually, I think it's very well priced. And anybody that's not willing to invest $49 in kind of learning to find data that actually now they're data driven. It's because you could find one strategy in this and make lots of money off of it, right? And to say trading's easy, not to say, you know, this is the magic holy grail of what you need, because it's more than just the strategy, guys. Strategies are just one key component of what you actually need to be successful in trading. 100%. But for the cost and what you get, the data that you get from this, if you're not a big backtester, you don't like to backtest your own stuff, this gives you kind of a framework to work off of, and it gives you really good probabilities, and you can build a ton of different things off of this. So I would definitely recommend trying it. And the price isn't bad. So I get the idea behind not discounting it. Change based on risk reward. That's a you question, not a me question.
Yes, that is a me question. So the two reports that I showed you here are more for bias, right? So like on this day, let me just clean this up one sec. So on this day, your bias is obviously short. Now you can scalp longs here, right? Like you can scalp longs. Let's say you have some sort of level over here, price comes into your level, you can scalp along, but overall, the daily bias is short. So these two reports that I showed you are more for your bias, determining, okay, what direction am I moving towards? Like, and what an analogy of that is, like, you want to just hop on the wave. You're not trying to fight the ocean. You don't want to fight the wave. You want to hop on the wave. The move is going to be most likely to the downside. Now, in terms of risk to reward, like to touch on the risk to reward piece, now we have the targets. So how are we going to determine our targets? Going to the initial balance report, back to the IB. Over here, number 7, we have the sub-reports. These are like filters or variants of a certain report. So you can think about the initial balance as like this, like the parent, and there's a bunch of different reports that you can look at. So what that means is you can look by weekday. So you can filter for specific weekdays, right? And I'm not at the targets thing yet. You can filter for specific weekdays. So we can see actually Mondays are actually a lot stronger for the single break of the IB. Then we go to Tuesdays, still very, very strong. So Mondays, 81%, Tuesdays, 77%. Wednesdays, big different story now. Very different story here for Wednesdays. The double break is a lot more probable here. Thursdays, same thing. Double break is more probable. The single break is not as strong. Fridays, now we go back to that strong single break stat. So one thing, just before I get to that risk to reward, that target conversation, I want to tell you guys that one thing that nobody in the trading space does is analyze the data by weekday. It is one of the biggest mistakes that you can make because, as you can see, the weekdays do not behave the same. So we go to Mondays. 80% of the time, this is an A+ trade for me. The bias is A+. I don't need too much more confluence. If I get the opening candle that's, let's say, price breaks to the IB high, if I get that opening candle being green, that is an A+ day for me. I'm trying to find an entry no matter what, right? Whereas Wednesdays, not so much. I'm not going to trade that IB single break on a Wednesday maybe unless I have a lot more confluence. So a massive, massive mistake that traders make is that they don't look at the data by weekday. You have to be looking at it by weekday. Every single report for every single asset, whether that's crypto, Forex, stocks, or futures, has drastically different data by weekday. So you have to make sure that you're adapting to the day that you're trading. Just wanted to mention that. I don't know if anyone here has ever looked at it this way, but it is extremely important. So you guys have any questions on that before I move to the targets piece? Yeah, perfect. That's super important. Yeah, so the quant systems, this is exactly the way. We want to give you guys the ability to actually use the data the same way that quants do, but in a way that's actually obviously not very hard to do. So the one that I want to move to now is called the IB by levels report. So again, the sub-reports are just variants, they're filters, honestly, or just variations of a certain report. So let's go to the initial balance by levels. Okay, so what we see here, I'm going to go back to my chart for a second so I can explain what this is actually doing. I'm going to go to my IB indicator, and this indicator is actually super powerful. So you can scroll down. We're going to turn on my minus 0.5, minus 1, and I'll just turn these on too. So on this day, let me just make sure that this one turned on right over here. Okay. So on this day, this was last Thursday, the initial balance range on NQ was 143 points. So from the IB low, 143 points lower is what we call a 1 times level, like a 1 level. And all you're doing is you're taking the IB and you're stacking it once below. That's -1. If you want to go -2, you go from the IB to -1, down 143 points to the downside. It's literally just based on the IB size. So this here, I'll just write this out. minus 0.5. And we do have the labels for this, but it only applies to the current day just because it's cleaner. So we have the -1. I'm going to leave it at this for now. So this is the -0.5. This is the -1. This is half from here to here is half of the IB range. Now, what this report looks at is how often does price touch each of these levels. What you can see in the last 6 months, 68% of the time on days that break to the downside, price is going to touch this -0.5, right? So on this day, you're looking at a 70-point move. If you knew that there was a practical 70% chance that price was going to touch this point, would you take profits up here? Probably not, right? How do you maximize your winning trades? You set data-backed targets that are high probability, right? So are you going to take your profits 5 points out of the 5 points below the IB when you know that there's a 70% chance that price is going to touch here? Again, probably not. So the idea is, how do I maximize my winning trades and the days that I'm right with high probability targets? And this is exactly how you use the IB by levels report to set your high probability targets. Now, what you're going to see here is there is a massive drop off from the -0.5 to the -1. So what that means is the majority of your position should be locked in right over here. This -0.5 is your area to lock in 75, 80% of your winners, and then you can leave the rest to run. In this case, price will only reach this point 28% of the time in the last 6 months that break only to the downside. So this report is a fantastic way to set your targets when you're short, but also, and I'll show you guys a different example here, if there is a low probability that price is going to get to another level, you can expect a bounce off of that level if you're scalping long. So I'll show you guys a different example here. Maybe today is a decent example. Honestly, I haven't checked. Okay, let's look. So what you guys can see today, what do we notice? Little pop quiz, green opening candle, right? You can see this green box right here. Price breaks to the IB high. What does that mean? We are bullish. You do not want to be bearish on the day where this happens. So this is actually today. So let's use this example. This will be interesting. 0.5, 1, 1.5, 2, and now I don't have to write those levels anymore because they appear right over here. But I'm going to switch, customize support quickly, and go to breakout days. So this means that the days that break up to the top side of the IB. And yes, thank you, Edwin. This is pretty good. So what do we notice here? The 0.5 extension, this is a pretty significant drop below what you see on the downside. So the 0.5 extension only gets touched 55% of the time. So your target of the 0.5 extension of right here, this area right over here, is a little bit lower probability. So it makes more sense now to pull your profit targets down a little bit. So when you see this, you can also pull this in. So like, what if you don't want to go all the way to the 0.5? It's too far. The data is not good enough. Customize, breakout level 1. Let's change it to 0.3. Save that. And what do we see? 70% of the time, it's going to reach the 0.3. So what am I going to do? Go to my indicator, scroll down from 0.5, 0.3. This is going to come down. Now, I have a data-backed target of 0.3 that gets touched 72% of the time in the last 6 months of these breakout days. This is how you set data-backed targets. And again, on NQ today, the 0.3 is 40 points. You're done for the day. At 40 points, you're good for the day. You don't need to keep trading. Does anyone have any questions on that? Does that make sense?
No, I think it's awesome, man, because it gives you probabilities and expectations, right? If you know, so let's say the market's already traversed the 0.5, right? And now you know you're in this position, or you're looking to even take a trade to continuation long. You know, statistically, the probability of a further extension is like less than none, right? So for instance, let's say you get to the 1.5. Now you know a continuation in that is going to be basically a 93% chance it's not going to extend past that
Exactly.
point. So let's say maybe you're stalking a short because there's a really key area that you believe there's going to be some resistance. You could actually set up a setup and be like, hey, I know there's a 93% chance that we may reverse somewhere in this area, right?
Yeah.
Or if you're thinking about, hey, I want to catch this long and, we're trending today, there's a very low probability of a continuation. So this data is amazing if people understand how to use it. Awesome. Okay, what questions do we have? And also, I think we're ready to do the giveaway. I think Raj can add that on there. Let's let him butcher some names. I'm down.
Yeah, let's make me look like a fool.
Nah, you'll kill it. I got confidence. You speak well. So, all right, where you at, Raj? Where you at?
Yeah, we'll get the giveaway started in 2 minutes.
AB, awesome. Thank you. Yeah, and again, we have all the explainer videos right over here at the bottom. So this is a completely new video from the initial balance one, from the opening candle continuation one, that shows you how you can use it. And then it also shows you, like, I'm not sure how many of you guys trade the London or Asian session, but you can also just go over here, and not to overcomplicate it, it's not really that complicated, but you can pick different sessions. You can switch your sessions, you can do whatever you want. You can really customize this. And something that we just started to talk about recently is that Q4 of this year, we're releasing Edgeful AI. So imagine any trading question that you have, you'll be able to ask Edgeful AI. Number one, you'll be able to say, how can I actually use this report in my trading right now? Upload a screenshot of your chart like this, right? Let's just say you uploaded a screenshot of your chart. And you were like, this is my style of trading. These are my bookmarks. Use these reports. What can I do right now? Create me a daily trading plan. Pre-market, you can ask. After the initial balance forms, you can ask. And it will tell you. It's not going to give you the signals. There's no holy grail. Brian said this before. There's no holy grail. There's no one system that is the king of them all. But it's going to tell you, hey, what I see is the opening candle's green. Price breaks out to the initial balance high. In this case, here are your high probability targets. This should be your bias based on what the data shows. It's not going to tell you where to enter or stop out or take profits, but it will tell you that the 0.3 extension is a very high probability area for price to get to. The other piece is that you'll be able to combine reports. So one other thing is that let's pretend you want to know how often the opening candle's green and price breaks to the IB high and price reaches this 0.3 extension. You literally type it out, same exact way that I just said it. How often does the opening candle, is the opening candle green, price breaks only to the IB high, and price reach the 0.3 extension to the top side? And it will go through on any ticker you want throughout any session, and it will give you the answer. And you'll be able to actually save this report, like we have right here, as like a new custom built report. So it'll be built right into Edgeful, and you'll be able to see it as if it's any other report. It's not going to live in like the depths of some chat where it's like you need to scroll up and remember where the chats are. You'll be able to save it to your Edgeful dashboard, so you can have your completely full custom reports built right into your dashboard the same way that you see right over here. So,
wow, that's super interesting stuff. Really cool. Really cool. When's that coming out?
Q4 of this year.
All right.
So soon, hopefully. I mean, Q4. If we miss Q4, it'll be a pretty big.
I'm well aware of setting targets and then kind of missing those because you want to make sure everything's perfect. So, no, don't take them if they don't make the launch. Don't take them out. All right, we got a wheel. And we have a lot of names on there, and hopefully some of those names are gonna be really hard to pronounce. I'm hoping. All right, what do we got? What's our first one? It better not be an easy one.
I hope it's Johnson. Oh, God.
Oh, there you go. Yeah, have fun. First name.
Okay. Congratulations, Idmusa Yusuf. Congrats.
Sounded good. I think you got it.
Wait,
all right.
Is that how you would have said
it? As a reminder, if you've won before in the last 90 days, guys, we need to share the wealth. We want to give credits to people that haven't won. Just keep that in mind. So if you have won, we'll just send the credit to somebody else. All right, next one. That was a good first start.
Please, John Smith.
John Smith, yeah. Looks like a long one. What we got?
Nice. Congratulations, Abraham Burns.
Got it. You killed it. You killed it.
Good.
Even on the hard one, I think you did a good job on that one.
Yeah.
So, all right, let's do a little bit of questions. Let's get people involved. What other questions do we have? Anything you guys can think of. All right, here's one.
Yeah, we do have data on the orb. So let's talk about that quick. We do have data on the orb. I want to show you guys actually something that makes it, this is just something like I know off the top of my head. So ES, I'll show you guys right now. It's super, super interesting. I'm going to go back, and I do have to go back a little bit far. January 2024 to the Q1 of 2024 is the key here. The 15-minute orb. So I'm going to hide this. I'm going to hide this. I'm going to put on my orb. Let's put on my orb indicator. So what this does is it plots every single day for you the high and the low of the first 15 minutes of the session. Obviously, this is all customizable, but what you can see here, this is a great example from yesterday. Q1 2024, 80% of the time, ES double breaks the orb. So what that means is price comes up, breaks one side, and then reverses to the opposite side. So I'm gonna make this red so it's a little bit easier to see. Q1 2024, literally like a no-brainer, take the opposing trade. So if it breaks the downside first, target the upside. If it breaks the upside first, target the downside. Now, I just want to show you guys how much the data can change. Q4 of the same year, so not that long after, we go to October 1, 2024 to December. What happens here is that the double break gets cut nearly in half. This is super important for you guys to be able to adapt to the market environment. So if you see an 80% that goes from 80 to 75 to 70 to 65 to 60, you're already like, that's one of the ways that you say, hey, this orb is not working anymore. I need to take a step back and reevaluate my strategy. So fantastic that you took the orb today. Obviously, I'm happy that you made money on that. The important piece is adapting to how the markets move, right? I showed you guys an example. This is like just off the top of my head, like one of the biggest drastic examples. And that double break of the orb in the beginning of last year was like, it was honestly the most popular report. And then what happens is the reports kind of come in and out of popularity. And this is exactly the reason why you can't screenshot these things, or you can't get like these PDFs from like 2 years ago that tell you the initial balance does this or the orb does that, because it gets stale very quickly. And as day traders, we're holding trades for 10, 15 minutes, an hour. We can't be using data that's a year old. We have to be using the data based on what's happening right now. You guys are all familiar with how quickly the markets change. It's all based on what's happening right now. So this is like the best way that you guys can actually stay in touch with what's happening in an objective and data-backed way, rather than like, oh, I feel like the orb doesn't really double break anymore or whatever else. Does that make sense?
Yeah, no, it does, because the market does adapt. It's so the market's like a dysfunctional human. Like it's going to do certain things sometimes, and it's not. Yeah. And that's why I always tell people, like, look, if you have edges, there's going to be times where the edge doesn't play out very well. And I don't know if this data is the same, but I know the opening range breakout during certain months has different performance. Like during summer months, the orb doesn't play out as well as it does in some of the other months. So it's like, you guys got to look at that stuff, because sometimes what you'll do is you'll build this like confirmation bias around your setup. Yes. And then when it doesn't work for like a week, you're like, what the heck? And then if you actually looked at Edgeful data, you'd be like, oh, I get it. It's just not a very good time to be trading this particular edge. The nice thing about Edgeful is like, look, you don't have to stick to just one strategy, and you can also adapt the strategy, and you're not, making your decisions based on your emotion and your biases. You're making decisions based on data. And that's why we have our advanced journaling and our analytics and stuff. It's like, lean into the data, guys, because unfortunately your emotions are going to make you make really bad decisions. And that's why the data is so important.
Yeah. So I see the question, is there any journaling options to the pro level at Edgeful? So right now we have one plan that gets you everything except the Edgeful algos. So the only pro level plan that we have is the algos. So these are TradingView strategies that we have, like they're built into TradingView. Right now we have them in the form of like alerts. We have one for the gap fill, for the IB, and for the opening range breakout. We have 3. We're actually releasing a 4th one probably at the end of this week or next week. It's going to be for the engulfing candles, but that is the only upgrade that we have. So we don't have any journaling. We know that there are some fantastic journaling tools like the ones that you guys have, but also out in the market. Right now, our specialty is the data, is making sure that you guys have the information, the data that you need. So we don't have any journaling in here, but what we have is obviously the data, the indicators, and the algos, which is the only like upgrade that you can have.
I like that you separate the algos, where if somebody doesn't really want the algos, they don't need to get them. And also like that you don't have multiple tiers where like some companies will be like, okay, well, you get a taste, but if you want it all, you got to like upgrade 3 more tiers. And then you're like, well, I don't even want some of the stuff they're packaging in this. Like, just give me everything. So I like it. I think there's a ton of value there. What other questions do we have?
Great question, Spade. So the data goes back 5 years. Now I have a pretty hot take on this, and I want to explain my hot take. So the data goes back 5 years. You can pick any time frame you want. You can select last month. You can select Q4. You can select Q1. You can pretty much pick any custom like start and end time down here. But going back 5 years, in my opinion, and you guys don't have to listen, this is just my opinion. This is not like any advice, obviously, but this is my opinion. Going back 5 years is far too long for the context of day trading. So again, we're holding a trade for 5 minutes, 10 minutes, 1 hour. Going back 5 years, let's kind of recap what's happened in the last 5 years. 2 elections, pandemic, unprecedented financial stimulus, unprecedented inflation for the last 40-something years. There's been multiple wars. There's been a lot that's been going on. Fed cuts, Fed hikes. There's too many market environments in that 5-year period to take the average of it and then say, I'm going to use it in this market environment. That's why we have the default time frame to 6 months. It's a big enough sample size to where you get enough data to actually go based off of. And it's also recent enough to where you can capitalize on what's happening right now. We get this question about going back 10 years, 15 years, 20 years. The data from that far back is completely stale, again, in the context of day trading. If you're an investor, you're holding for multiple years, that is a completely different story. But this is not tailored towards investors. This is tailored towards day trading intraday. You're in, you're out within the New York session or London session or whatever else. You're not typically going to be holding for a couple of years.
Yeah, and I'm sure you looked at those data points, and I'm sure you looked that far back, and you probably found a lot of noise in that data.
Yeah.
So I think as you've looked through this stuff so much, I think that's the reason you have that bias. That's the reason you have that opinions, because you looked at the data already, and more recent 5 years, plus. It just doesn't, it creates too much noise. And that's another thing you need to look at as a trader is you kind of want to know what edges are playing out right now so you can capitalize on those edges while they're playing out.
Exactly. And I still feel like 5 years is too far back, but again, I'm not going to like cut everyone off, because at the end of the day, we don't provide our opinions to you guys. Like, we are not saying this is the best strategy. We are not saying like this is what you need to be doing to make money. We are giving you the tools that you need to have success. And if 5 years of data is what you want to look at, then be my guest. It's not what I do, but you don't have to do what I do. And I actually don't recommend that you do what I do or blindly do what anyone does. I think that you guys need to make sure that what you're trading, you have faith in, and you understand the mechanics and the data behind it. And then that's what trading is like, you understand what you're doing, you understand the risks behind it, and you put your money behind the risks that you're comfortable with. So, and that means whatever it means to you. But like for me, I'm not doing a 5-year look back period under any circumstance, because it's just, in my opinion, way too far back. Like, this is the last 5 years. Here, if we go to the 5-year chart, this is the last 5 years. You have practically the drop here, the bull run, like the nonstop bull run, the bear market, and another nonstop bull run with some fun news over here. So
and that's really good advice. Is look, don't try to copy anybody's system.
Yeah.
You're not going to understand the nuances of the system.
Yeah, exactly.
Just learn the systems and pick out what you understand, what works for you, where you understand how the edge is supposed to play out. And that's why this is so great, is you can pick things that you like from what they're showing you data wise and interpret the way you want to interpret, or use AI to do it, like however you find and build your strategy, but you have to understand it, or else you're not going to have conviction, which means you're not going to be able to hold the trades and stuff like that. So just really figure out what works for you. Don't try to copy others, because it's not going to work. Systems that I trade, people could try to trade, but maybe they can't because of their psychology, right? So figure out what works for you, dig into it, put in the time, and you're going to get the results. Does it include CL?
Yes. So we have practically any stock, Forex, and futures contracts. Crypto is a little bit different. We try to limit. We have no meme coins. We only have like the big ones. We have like a market cap limit on crypto. But yes, we have CL, we have lean hog, we have corn, we have oil. We literally have like everything. And you can just go through and look at whatever you want. In terms of the futures, we have YM, RTY, pretty much everything. There's one piece that I want to show you guys. That's the screener. So right here at the top, this is the screener. I'm going to tell you guys the exact use case of when and why you can use this. The way that I like to do it is right over here. I like to select all. So what this means is now we're looking at stocks and futures. And then you can go down here and you can search. You can see I have on my personal screener, you can select what goes in here. But I have the Mag 7 plus QQQ, SPY, and then ES, NQ, RTY, YM, and whatever else, the major market movers, right? So I have the major market movers in my screener here. I like, personally, the daily bias screener. And what this does every single day, you're going to see over here the daily bias based on the opening candle continuation report, the report that I mentioned to you guys before. Then the IB report. Now you can see almost all of these tickers here, the major market movers, are bullish for the IB. This is all data backed. This is not based on whatever I think is happening today. Here again, IB by rejection, another sub report we have, mostly bullish. Previous day's range, mostly bullish. So guys, today, if you are going to be the guy that's going to be trying to pick tops, you are on the wrong side of the data. This sets up every single day. This screener shows up every single day. This is something that you guys should have up on your screens during your trading. If you're trading, you should have this up. You need to understand what direction the market is moving. There are three different states that this can be in, really. All green, like practically all bullish. It'll never be all green, but like practically all bullish. Obviously, on those days, you want to be long bias. You don't really want to be short bias, or maybe you can scalp shorts. And there's all red. Everything is red. You don't want to be long bias. Maybe you can scalp longs, but your overall direction should be to the downside. And then most importantly, the days where this thing is very split, where you scroll down and it's red and green, kind of like the way this one looks right now, are the days where almost universally, and this applies to all of them, almost universally are the days where price action does something like this. Almost universally, the price action will chop around, and these are the days where you blow your accounts. Because the major market movers are going in opposite directions, all based on what the data is showing. So you guys need to be really careful about the days where the entire screener is split up, and we're actually adding in a summary, a overall sentiment at the top here. It'll be released probably this week, I hope. But this is your number one signal to say, I want to lean bullish, I want to lean bearish, or I'm going to take a step back and either paper trade or lighten my size. Maybe I use 1 micro instead of 5 or 10. So does anyone have any questions on that? Perhaps?
I don't think we have any questions on that, but I think we have a few other unrelated questions.
All right. So I'm going to talk about 6. So the question is, difference in accuracy, in your opinion, is the data between 3 months and 6 months. Let's go to the initial bounce. Let's go to the NQ. And now I want to show you guys the 6 months, and I want to show you guys the 3 months. I don't think that there is, and I'm going to show you guys, I'm actually going to tell you guys how I like to use it. So when I look at a report, always my baseline is 6 months. But what I want to do is I want to look at the 3 months as well, because in the last 3 months, if I notice that this number, this single break, is a lot higher, that's going to give me more conviction to actually take that trade in this market environment. So let's look, because I actually don't know off the top of my head, based on memory what this is going to pull up. So we're going to 3 months now. What we can see is it's practically the same from 70 to 66. So this means to me that everything is like pretty even. There are going to be times, now let's try ES for a second. So this is 3 months on ES, 66%, going to 6 months, 68%. So again, very similar, right? The market environment hasn't changed. Let's say, for example, that I'm going to go back to NQ. I'm going to try to make it different. I'm going to go to 1 month. I'm going to try to make it different. Let's see. Okay. So this is a pretty meaningful difference. Let's pretend that this is the 3 month instead of the 1 month. Now this would give me some more confluence to say, you know what, I'm going to hold a little bit more weight towards this IB single break now, because in the last 3 months, it's leaning more towards that single break. So the way that I like to consider the different date ranges is one is never the best, but looking at the trend in how they're moving from further back to closer to now. So if I notice that the 6 month is 70% and the 3 month is 50%, then I'm going to be like, whoa, I need to take a step back. But if I notice that the 6 month and the 3 month are pretty similar, everything is covered. Everything is everything is running smoothly. Then if I know that it's moving further into my favor, like in this case here, that means to me that I want to kind of hammer on this more as the more recent market environment is like giving me this opportunity. Does that answer the question?
Yeah, I think it was a good explanation.
Okay.
You're just looking at the data. You don't make your own opinions on it. You just look at the data
Exactly.
and you let the data drive your decision. And that's really what it comes down to.
Yeah, exactly. Spade, good question about exports. We don't have any exports right now. When we have Edgeful AI, we will allow exports. So you'll be able to, we do have actually, is down here, we have, I'll go back to 6 months. We have a data table that will allow that you can like sort and filter on. So actually, let me go to one that's like a little bit more meaty. I'm going to go to gap fill by weekday. And then, so right here, you can go and let's pretend that you only want to look at Mondays, for example. You type out Monday, and then now you have all the gap fills only for Monday. You can go over here and you can type, I want to look only at the ones that filled. Now you have 2 filters. Now you're looking at gaps that filled. You can sort by gaps down or gaps up. You can sort by gap size. So you can do that here. You cannot copy paste or export this, but when we have Edgeful AI, you will be able to export.
Awesome. Cool. What other questions do we have? Looks like, yeah, I totally agree with that.
Yeah.
Let's go to the next one.
Yeah, you can. When we have, so Q4 of this year, you'll be able to export all the information in here. We just don't have it right now. And it's up to you. I mean, like some people love the Excel side of it, where you're going to go put it into Excel, like do whatever you want to do. And there's nothing wrong with that. You guys can do that. I mean, it doesn't really matter to me. That's just not the majority of people because they're not as familiar with Excel. Like it is what it is. But we are going to have the exports when it comes to Edgeful AI.
Cool. All right. Where are we at on likes? I know we were pretty close to getting the likes we're looking forward to do another giveaway. Where are we at, Raj?
We're like around 10 likes away. Or 6 likes away now.
6 likes away, guys. All right. Get those 6 likes and we'll do it. If not, like last time, we dipped because we didn't get enough. Yeah. So close, but so far. It's like one tick away from your profit target and turns around on you.
Yep.
And you're scrambling to hit your keyboard to get out. How was your trading today? Is that a general question?
For me, trading was good today. One and done. Luckily, it's like I'm always one and done. Typically, if I take more than like 6 or 7 trades, I know that I'm tilting. Like my journal always looks like 1, 2 trades green, 5 or more trades always red. So.
And that's the data I see day to day with our traders, and we have a lot of traders. So it is definitely that either you catch your wins and you're just done, or you don't catch your wins and then you're like, okay, how can I win this day back? And it's like, doesn't work out. Usually you just tilt.
Yeah, exactly. Yeah.
Oh my gosh, 1 to go. Did we get the 1? I think we're close enough. We'll give them a one one like thing.
We need one more.
Are we at 99 or are we at 100?
Let's get it to
100 party. Oh, Raj pulled up the. All right, cool. Let's butcher some more names. Let's do it. Actually, you did a pretty good job reading them today.
Come on, John.
Looks like a short name.
Anish, congrats.
We'll reach out to you. We will email the winners. If you won before, unfortunately, we want to spread the wealth of these giveaways. Looks like another short name.
Congrats, Weber. Awesome.
Got it. Congrats, Weber. All right, that's it for the giveaways. Let's wrap it up. We're right about an hour. We need to respect our CEO's time. He's a big boy, so we need to make sure. And I know you spend like all day on phone calls. I know you help a lot of people, which is amazing. That's why I think we really align. You're always on the phone with traders and trying to help people, and it's probably why you got a little bit of a sore throat today.
I do. That's
on the phone.
Excuse me if I've been clearing my throat.
And I can tell, through our conversation, I can totally tell how passionate you are about this stuff. So guys, it's always important to kind of understand if the company you're working with actually cares and is passionate about it. And that's definitely checks all the boxes there. So what do we got? Congrats. Any other questions? I can't wait for it.
Customized data idea. So Edgeful AI Q4 of this year, we're definitely going to have, you'll be able to ask any questions on reports, filter any days. So again, FOMC was not too long ago. Hey, tell me what the results of this report are only on FOMC days in the last 2 years. Only on FOMC days in the last year, whatever else it is. So any questions you guys have about the markets, even if you, regardless of what it is, Edgeful AI will almost be able to answer anything. Not going to say everything, obviously, depending on how complex it is, but yeah.
All right, cool. We'll do a couple more questions, but just to remind people, we extended the 60%, and then today, if you log in, you're going to notice a new plan on the dashboard. It's like, we're going to call it like the launch pad, and more or less, it's a really low fee for an entry into an account, right? This is an account that can qualify for funding. It's a smaller account. The purpose behind it is, look, if you guys do well through the assessment and do well into the live brokerage, as you know, that's our goal, we'll scale you. So you don't need to start with a big account. And the main thing is, we want a really low entry barrier for people that are just beginning or maybe you've already trading. It's going to start at $25. There's no customizability with it. It's $25. You can't reset it. And then after you pass, and this is something that we don't normally do, but this helps us offset the cost, right? But in the back end, you have to pay the $99, which puts you into the next stage of it, and that just helps us offset the cost. If you're not all about that, I think our all-in cost at $59 is literally the best in the space. I'm not sure if anybody has a better price than that all in, right? So that's another option. We just wanted to lower the entry barrier for people that maybe want more in the lower $25, and that really helps people just get into the ecosystem, test it out, see if they like it and stuff. So that's something we'll be launching today. It is
awesome.
A 1 week type of thing. So it's not going to be for forever. We kind of want to see how people like it, if they like it, if they don't like it, and then go from there. But any other questions? If not, let's wrap it up. We need to be respectful of Mr. CEO's time.
Yeah.
He's a busy guy.
I see this question, and I have I want to answer this question. This could be the last one. That's fine. I have a pretty important take on this, and I actually will pull up a chart, which will be helpful for this. Just give me a second. Let me just pull it up quick. Where is it? So there is no best risk to reward, is the short answer. The important piece is, sorry, while I pull this up, this is I wish that I had this. I used to have it on my desktop. I don't know where it is now. Just give me a second. Here it is. Okay. So right here. I'm going to make this bigger. Okay. So guys, this is a chart that shows the probability of taking a certain amount of consecutive losing trades based on a certain win rate. So most people will say 2-to-1 risk to reward, 50% win rate is profitable over time. I'm happy to take that, right? Now, what comes with that, and I'm going to make this little drawing here. I'll make it green for a second, just because I have this other one that I can't remove because I took this out of my trash. But 50% win rate, 2-to-1 risk to reward. Let's look at something quick. There is a 95% chance that you take 5 losers in a row, and still you're trading a 50% win rate strategy with a 2-to-1 risk to reward. There is a 52% chance that you guys are taking 7 losers in a row if you're okay with a 50% win rate. I think that most people don't actually understand what the outcomes are of the strategies they pick based on the win rate. This is super, super important. I don't think that most people can actually trade a 50% win rate strategy because they're not comfortable taking 7 losers in a row. I think that anyone watching this, myself included, is going to, after 7 consecutive losers, is going to be like, what is going on? This must be broken. Where you probably want to live is right down here between 65 and 70%, because the likelihood of taking 5 consecutive losers is very low, especially at 70%. Only 21% of there's only a 21% chance you take 5 losers in a row trading a 70% win rate strategy. And what that means is your risk to reward is going to be less. Without question, your risk to reward is going to be less. The important piece is if you're trading a 3-to-1, 4-to-1, 5-to-1 risk to reward strategy that has a very low win rate, you need to hold on to your winners to your target. If you don't hold on to your winners all the way to your target, you're not trading a 4, 5, 6, whatever it is, 3, 4, 5-to-1 strategy. You're mostly trading a 1-to-1 or 2-to-1 with a 20% win rate, which is not actually profitable. So if you have trouble holding on to your winners, you need to use a higher win rate strategy, and your risk to reward needs to be smaller. I hope that makes sense. This is
I preach this all the time because a lot of people, especially because they're so accustomed to assessments and they're risking such a large amount of their capital per day, and they don't realize even higher win rates, you're going to have streaks. And as you can see by these numbers, you're going to have streaks where you lose basically 6, 7 times in a row, especially with lower win rates. And people don't have their risk set appropriately, so they end up blowing the account. And that's like the very number one thing we preach during our transition from traders going from the assessment into a live account. We meet with all of our traders and talk about risk. And this is what we bring up all the time. It's like, you have to have the right amount of runway, i.e. capital, to weather the storm of drawdowns, right?
Exactly.
Especially based on whatever the win rate is. So I love this little chart. I'm going to have to ask for this chart. I don't know if you could email it or something for me, but it's a great chart to look at and reference and understand, like, here's the probability of how many losers you can see. Because it's really important, especially for the psychology.
Yep. Agreed. So that's it. That's my last piece of advice there.
Awesome.
Yep. So
awesome.
Appreciate you having me on.
Yep.
It's a pleasure.
Thank you for coming on. I know you're a super busy guy. Really appreciate the presentation. You guys have you guys have been cooking, because I can tell you, I haven't actually logged in or deep dive into your program for a little bit. And I can tell you the amount of changes and how much you've added just in a few months is like, it's really crazy. So keep cooking, man. It's awesome.
Thank you.
All right. Thanks again for joining. We'll go ahead and sign off. Catch you guys next time. Thanks, guys.